You're here because you've heard about Wealthfront as a Robo advisor. You're now here because you're looking for somebody who's been using it for a lengthy period of time. In my case, I've been using Wealthfront as my primary investment vehicle for over 6 years. Still not sponsored, so you can take what I'm going to give you with a grain of salt, in that I'm here just to give you data on my personal experiences with it. I'm not going to overpromise and say you're going to get 17% returns year over year using Wealthfront, or have a weird looking thumbnail with an O face. I'm here to give you data and my experiences having used this platform for as long as I have. Hello, I'm Wanderer001, and just like I said, this is my long-term review of Wealthfront. I've been using it since it was actually a green and orange site. As you can see, Wealthfront has changed itself quite a bit, pretty much going away from all the green and moving over to a purple transition. So we're not here to nitpick them on user interface stuff, but I will admit over here on the right-hand side, I am happy that I no longer have to block out information for pending transactions and so forth. The one thing I will admit is, for a lot of this stuff now, you really have to dig into a lot of the menus to find that information, which I don't necessarily know if I'm happy with or not. Starting at the top, you have your goals. I have one goal, and that goal is just to retire. You can see at 65, I will supposedly have 2.8 million based on this number here, which is encompassing all of my accounts. And as you can see, it is giving me information about how they came up with that because I happened to click on that. Selecting goals will show you have one goal and it is comfortable. You can add more goals if you want, but I have covered the goals as well as other aspects of Wealthfront in many of my past videos, which can be found in the upper right hand corner right now. However, if this is your first time, they have changed the menu up top here. So our overview is where all of our accounts are listed. Next we have Explore, which will let you explore some of the changes that they've actually made to Wealthfront. And back in September, they introduced socially responsible investment portfolios. They still have their classic portfolio, but now you have socially responsible and direct indexing. Some of these options do not become available to you until you reach certain thresholds of money in your account, mainly the direct indexing. If we come in here, it will show you information about that, but it also says that you cannot do this unless you have over 100,000 in your investment account. Now, if we selected socially responsible, it will give you an idea of how well the returns have been, and then based on a risk score, these are going to select funds within these areas which are considered socially responsible. And I like the fact that they brought back the slider so you can kind of tell how well things are doing. You can also select add to profile if you want. I'm going to pop back and show you the classic profile. Here it's showing you the returns over 3 years. And if we slide this around, you can see the rough estimate as to how well your returns would have been. Now, they do allow you to edit each individual portfolio, and I'll show you that a little later. But I like that they have brought back the ease of being able to check the different profiles. And not only that, here you can see US stock, ETFs, bonds. They break out all the things that you can have now, some of which are only accessible in your Roth IRA versus an investment. But if we come up to US, it will show us everything that they have as possible options. Clicking into any one of these will again show you market returns as well as lots of other useful information for it. We're going to come back to our overview or main page because the other one is just transferring funds around and then inviting friends, which we'll talk about a little later. So those have been major platform changes. Now let's move on to returns because, well, that's probably your primary focus of why you're here. We will come over to my IRA. And here we can see up at the top, I like the fact that they have this information very visible for you. You have all-time returns, contributions for 2020 and then 2021. Now I'm doing this during a particular volatile time in the market where things have been going up and down for the last 3 to 4 days. In fact, right before filming this, the market was down about 900 points for the Dow Jones. And I do that because I want you to know that returns are not a guarantee. But if you passively invest consistently, you will dollar cost average into the market, thereby making things not look as scary. Here you can see over the 6 years that I've been doing it, here's our major dip back in 2020. And then we've just been kind of going up. If we come down to 2022, you'll actually see that my account overall is down 5% based on current market. But coming back to all, you can see that pops back to being up in the green. And they move the location to find this. So if you come over to your all time here and click the I, it will bring up time weighted return, money weighted return, and dividends. And here you can see this dividend is based on the 6 years that I've been doing it. That's not counting any asset appreciation. That's just dividends. So if we're going to look back at my previous returns, my money weighted return for my Roth last time I did this, for my 5.5 review, I was at 93.66. Here you can see we are sitting at 82.75. Gone down. However, the time weighted was 87.43, and here it's 87.99. So this has actually gone up ever so slightly. And if you ever want to know the difference between time weighted and money weighted, simply click the I and it will let you know the information about that. Again, I covered that in past videos, so I won't be covering that again, but this is a better representation of your portfolio based on the inception of when you started investing money over how many years you've been doing it, as opposed to when money's going in and out of your account. So that's my Roth IRA. As you can see, 6 years, it's still going in the right direction, minus these blips up and down. But keep in mind, you're investing in something like this for the long haul. Let's take a look over at my individual investment account, which has a risk score of 7.5 with me playing with some of the investments in here. If you saw that last one, I put some technology stocks in here. The IRA that you saw before was a risk score of 6.5 with minor tweaking, adding more into my stocks. And again, if we come over to 2020, you can see I'm actually down 4.88%, not as much as the previous for my Roth IRA, but you can also see that it has tax loss harvest $1.28 as of 2022. And if we bring that into all time, you can see $322.33. That is the neat thing that your investment account can do that your Roth IRA does not do. It tax loss harvests things, selling them when you lose value in your account to help you save money on paper on your taxes. But if we come up to our returns, here we can see our money weighted return last time I did this was 78.50. We are sitting at 64.10. Our time weighted return previously was 59.21, and here we're looking at 59.26. So again, it has gone up a little bit, but because of the markets being what they are right now, you'll notice here 37 and 38%. So current versus our target, that's because the market has kind of been going down a little bit. But again, I wanted to show you this because of the upward trajectory that you get when you continuously invest money into something like this. And as mentioned before, if we scroll down, you have the option to edit your portfolio, see recent activities. So if you wanted to see your transactions, dividends, withdrawals, this is how you'd be able to do it. Now, if we select edit portfolio, you can see that it's saying custom. I can select switch portfolio, in which I can go back to the classic or socially responsible indexing if I had over 100,000. If I selected classic, we can adjust our risk score because based on what I told it, it says I should be an 8.5 out of 10. I'm a wimp. I know I should make it higher, but it's difficult for me to do that. If I come back to our edit portfolio area and scroll down, here we have our add investment. And I bring this up because the other big thing that Wealthfront introduced in 2021, back in July, was this right here, cryptocurrency trust. Selecting this will allow you to either select from Ethereum or Bitcoin. Now, adding these to your portfolio will give you exposure to Bitcoin or Ethereum. And here you can see these are very tantalizing returns, but it is a much bumpier ride. And one of the things that I do not particularly care for, especially with the Bitcoin trust, is if we come down to our expense ratio, it is 2%. The rest of your ETFs that you're going to be investing in with Wealthfront normally are 0.16. 0.25 at most. To have exposure to Bitcoin at 2%, it's a little hard for me to chew. And there are other alternatives if you want to get exposure to Bitcoin without having to actually put up your own money. Over in the corner there, you'll see a link for a video that I did on a browser extension called Lolly, which will allow you to use a browser extension just like Honey, which will allow you to get cash back from purchases made through Lolly, much like a Rakuten or Honey. Instead of getting cash back, you get Bitcoin back. So if you're interested in that, review over there in the corner, as well as an affiliate link, full disclosure, if you're interested in that. But we're going to come back to our overview page one more time to talk about the personal cash account. I still have mixed feelings about the personal cash account. I dislike that they dropped the interest rate so drastically, so quickly. A lot of people called it. And you know what? I agree. It does feel a bit like a bait and switch. However, there are specific aspects having a cash account that I do like. Normally, I keep about $1,000 in here because what you can do is transfer between your investment accounts and your personal cash account within 5 minutes. If you do a transfer from a brick and mortar into your Wealthfront account, you're looking at a day and a half between sending money and it getting invested. So the ability to invest within 5 minutes was very useful today when the market was down 900 points and allowing me to jump in when it was red. So I like keeping a little bit of money in here and my business account up there, but I don't think that's the super selling factor that it was when it originally launched for Wealthfront. I hate to say it. I'm just being honest. Well, I'm going to sneak this in at the end because, well, this happened while I was editing the video to go live, and you probably have heard about it too if you're a current Wealthfront client. Wealthfront has agreed to be purchased by UBS Bank. It is a Swiss-based bank, but what does this mean for you and me? Well, supposedly, based on the Wealthfront article and several other articles that I have been checking into regard to this is, well, Wealthfront is supposedly going to be a subsidiary of UBS Bank. They will still be able to operate as they have been, but whenever something like this happens, you have to wonder, well, what happens now? Will UBS Bank start pushing their ETFs or mutual funds onto the Wealthfront system, even if the expense ratio isn't as good as you would get with a Schwab or a Vanguard? I have paused because reading through the article that's here from Wealthfront's blog page, which is the same article that was emailed to me, it says that the 1.4 billion transaction helps them accelerate their offering time horizon, meaning we'll get new features much faster. But now I have questions about, what about the cash account, which you just saw? What happens with that? You partnered with several different banks before to get the best rate. Are we now going to be stuck with UBS only as our cash account holder? Wealthfront states that nothing for its current customers will change and they will continue to operate as they have been in the past. Will that hold true? Well, we will have to wait and see what the next 6 months to a year have in store for Wealthfront, now being a subsidiary product of a bank, a brick and mortar bank. That was the big thing. Wealthfront was a fintech startup to get millennials who are comfortable with technology out of the big banks, and now they're owned by a big bank. UBS, I can see why they're doing it. They want to leverage the technology that Wealthfront has, but as a fintech investor, I don't know how I feel about Wealthfront being bought out. I'm not saying this is the beginning of the end, but it might be time to consider looking elsewhere, depending on what happens after the acquisition fully goes through. With that, if you are still interested in Wealthfront, I will have a referral code in the description area of this video. You can click on that, and for now, you can get $5,000 managed fee-free if you so choose to invest and bank with Wealthfront for the time being. With that being said, we'll just have to wait and see what the future holds. I have been Wanderer001. If you have any questions or comments, please feel free to leave them in the area below. And as always, thanks for watching. If you found this video helpful, consider giving it a like, as that will help other people find the video as well. If you like what I'm doing here, you can always help fuel the next review by buying me a coffee, link in the description below. Last but not least, if you want to be notified when I upload a new video, you know what to do.